Does anybody feel like they have anything they'd love for me to quickly go over that they're not understanding, or, you know, anything they've been learning on the online course that they would like a little bit better explanation on? Let's take the time for that. And then I'll get right into like the whole, like, finding confirmations within yourself, you know, remaining confident in what you see. You know, I see a lot of you guys always talk about the, you know, like the lack of believing what you're drawing as opposed to, you know, feeling confident in that. So before we get into that, does anybody have any questions or anything they'd love for me to review for them? I'm gonna go one by one. Let's see, Janelle.
Can you hear me?
Yeah, I hear you perfectly fine.
Great. I'd like to watch you actually do some setups.
Yes.
So that I can see that what I'm doing is the same as what you're doing. So I don't think as yet I've got to actually see you setting up some trades.
Okay.
And doing some predictions, because that way then when I'm actually doing it myself, if you record doing it, I can go back and ensure that what I do is the same as what you do.
Okay, we'll do that. Setups. Janelle wants to talk about setups. Anyone else? Let's see. Josh, anything you want me to talk about?
Let's see.
Or would you like to also see me set up my trades?
Yeah, I mean that'd be cool. I to be honest, I don't really have any questions. Just like to see how you set it up.
Perfect. All right, Arthur.
I just want to see you mark up a blank chart. Just mark it up like you because you mark your charts. Do you mark your charts on a Sunday or Saturday before the market opens back up?
If you haven't noticed, Arthur, I look at the same trades week in and week out. So all I do is continue what I've charted in the past. So
okay,
if I'm looking, like, for instance, USD CAD, right?
Mm-hmm.
These were all zones that I drew out from when the market was down here or whatnot. And you see, like, the colors were different was because before I had a darker background.
Mm-hmm.
I needed a light color. But lately I've been shifting over to the white background with the black zones. You know, there's just, all I do is just continue it, and I pay attention to that. Whenever I need to lay down a Fibonacci or whatnot, you know, I lay it down towards that, and I pay mine to that. But we'll go into that when I do a blank chart, if that helps.
Yeah, that'll work with me. We haven't got to that yet. And one of my problems, and I just noticed that you confirmed it really, and I kind of see it now, is I call it right. It's just that I go in too soon. That when I lost yesterday, that GR, I should have won that, but I went in too soon.
Yeah, it's usually the case. That's what. Remember the mindset talk we had on.
Yeah.
I think it was two one-on-ones ago.
Yeah.
We were talking about how it's not that you're wrong. It's either you entered that trade too late, or you are actually early on that trade. And when you're early on that trade, as you can see, and what, like, some people have been preaching, I think Jomar has been one of the advocates in the chat talking about, you know, risk management, you know, how he likes to scale in his entries, where if he's wrong or he's early on the trade, he's not putting his account at risk every trade. You know, if anything, he can handle the drawdown and then come back with a higher lot size and ride the wave down or up.
Now, that's something that stuck with me, seriously. So, like I said, after I can get out of the hole on this one and get a little profit out of it, like I said, when I take your signals, of course, that's what I'm some situations, I'm definitely going to do that. I'm going to go in maybe a little 0.05 or something.
Yes, yes.
And then if it looks good, then I go ahead and blow it up, you know.
Correct. It's
I don't know why I didn't think of that. Yeah, but that stuck with you.
Fine. Sometimes it costs us to lose money to learn some things.
Yeah, I learned a lot. Yeah.
Listen, look, Jomar, how much did the lesson cost you to learn what you know today?
It cost about 30 grand.
30K in losses in his Forex account to learn what he's applying today. And this week alone, he's up 10 grand. You understand? It's not about the monetary gain or losses. If you can't handle the win or the loss with the right mindset,
Yeah.
You understand?
Mm-hmm.
Trading demo. All right. Let me do
Mm-hmm.
it real quick, Omar. So let's see, Dean. Anything you want me to talk about, Dean? You hear me? Or if you want to
Yeah,
type,
sorry.
no,
I had to figure out. Not right now. I think I'm good. I just working on the head and shoulders on GBP AUD that I saw earlier in the week.
perfect.
And
I'll
just
go over that for
following.
you as well. I'll go over that for you as well because I know you were asking a few questions in regards to that. I'll go
Okay.
over that.
Hey team, sorry I'm late.
No, don't worry, Hemi. What's good, man?
Not much, brother. I just woke up.
Good morning. Let's see. Jaylene, anything you want me to go over? If you guys want to type it in the chat too, anything specific you guys want me to go over, feel free to do so. Do you have any questions or anything you want me to go over, Jaylene?
At the moment, no. I'm just kind of like listening and taking in all this new information.
Okay. So what I'll do is I'll start. Since let's see, some people wrote here. Can we see you take a blank chart? Yes. I'll make sure. What I'll do is I'll get a blank chart and basically work that way. All right. Give me a pair. Anyone, throw me a pair. GBP CAD. El Famoso. So I am going to delete everything on this chart. So what I got here is a blank, beautiful chart for GBP CAD. And what I'm going to walk through, you guys, is the very first thing I do on a currency pair or any chart whenever I look at it for the first time for the day. So if this is a chart that I've never charted up, or maybe, you know, let's say it's something I gained interest on and I decided to go ahead and go that route. What I want to show you guys is the few steps that I follow, not only to chart up this exact chart, but also the exact steps that I follow every morning when I wake up and I'm about to start trading. So before I even place a trade, before I even draw any trend lines, before I draw any support, resistance, anything on the chart, the first thing I do every morning is I look at the currency strength on finviz.com. So I go on finviz.com and I understand what the currency strength at that current moment is. So right now we're on the Asian session, right? The banks in Asia are open. And what we're seeing is, excuse me, let me put this down. So right now we're in the Asian session. And as you can see, from left to right is the order that the currencies are strongest to the left, weakest to the right. So right now, the strongest currency that we can see is GBP, the British pound, right? Second strongest is AUD, right? Third is Euro. CHF, which is the Swiss franc, is the fourth strongest. NZD is the, give me 1 second. Jose, Lewis, mute yourself real quick.
What was that?
Go over there.
Mute yourself real quick. So, as you can see, from left to right, left being the strongest, right is the weakest. So the first thing I'm gonna do is, I'm curious. I'm a curious cat, right? GBP USD is the currency that GBP is the strongest and USD is the weakest, right? So what I'll do is, before I even draw on GBP CAD, I'm just gonna pull up the pound against the dollar, and I'm gonna look at what it's doing. And as we can see right now, this candle right here represents 4 hours. So as we can see right now that the pound is stronger than the dollar, that means we can see potential buys in place right now, meaning the pound is stronger. So since the pound is stronger and I'm trading GBP USD, then I have my first confirmation of potentially buying GBP USD. Okay? So here it is. What's another confirmation? For the whole New York session, all GBP pairs were dropping, right? So 8 hours ago, we were seeing US dollar, GBP AUD, GBP NZD, GBP CAD, GBP AUD, and USD. You know, all these pairs were dropping. So I already have my chart drawn out here, but as you can see, in the present moment, based off of what I have drawn out here, the market failed to break past my zone here. It failed to break, and right now the market is retracing. Cool. I'm not jumping into conclusions yet. I'm not making a decision. What I'm doing next is I'm going to pay attention to the currency strength, then I'm going to go ahead and look at my good old friend Forex Factory. Forex Factory tells me what news events are coming up within the next few hours. If I plan on entering this trade right now, and let's say I'm willing to hold it for 100 pips, how long can 100 pips potentially take me? Let's say it takes me from here to midday tomorrow. Okay, do I have any news events from here till midday tomorrow, right? And from right now till 12 p.m. Eastern Standard Time, I have one red folder at 5:30 in the morning, right? I have two orange folders, so one high impact, two mid impact, and a bunch of low impacts. That's at 5:30 in the morning. I don't wake up at that time. So if my decision is to wait till after that or potentially, enter this trade tomorrow morning, right? As opposed to taking it now, if I don't see all the confirmations, I have to keep that in mind that whatever is announced in these news events while I'm sleeping can potentially harm me, right? Or it can go in my favor. All depends. Another event is at 12 p.m. is the parliament. It's another Brexit vote, all right? So we already know how these votes affect the market. And on top of that, it's Friday. This vote is going to occur when all the investors in the New York session are out for lunch. You understand? So if anything does occur from then to then, we may want to wait till after this week is over and the opening on Sunday to determine if GBP is a good trade to take. Now, I'm just giving you the breakdown of how I look at things and how I think of things. You understand? Now, the first thing I'm going to do is, let's go ahead and pull up GBP CAD. Again, I like to keep things simple, right? One of the most important phrases I share with everybody and anybody who's ever spoken to me about trading is what? Arthur?
Keep it simple.
Janelle?
Keep it
Sorry.
stupid simple.
Keep it stupid simple, right?
Mm-hmm.
So we want to keep it stupid simple. And I'm going to write it right here. KISS, right? KISS. Keep. Can't even spell. Right? Keep it stupid simple, guys. So, okay. Resistance is when what? Who can answer what resistance represents? When the market has reached its ceiling, right? So I'm going to pay attention to where the market is hitting its ceiling at. We notice that if I line up my resistance based off of these candles over here, and then I look left, can I confirm it? Here's resistance over here. Here's resistance. We're not going to see anymore. Cool.
So, Jose, you're in the 15-minute time frame. Is that where you would usually start?
No, I'm on the 4 hour.
Oh.
I'm on the 4 hour, but I'm just showing you guys real quick about resistance and support, right? But where I usually start off with a blank chart is the monthly, okay? So you guys see this right here, resistance, support is the same when the market hits its floor, right, of that zone. So I'm gonna go ahead and erase this here, and let's go to our good old friend, the monthly chart. And guys, you don't have to do this every day. This is for when you open up a blank chart and you wanna identify the key important areas, right? So for those of you guys who have been with me for over a year, you guys know my 3-step system by now, right? What does the 3-step system help you do? It helps you understand the long-term direction of the market, the mid-term, and the short-term, right? So here's support. We're gonna find the resistances. Here's resistance. Here's resistance. And here's resistance. Gianna, close that door, baby. So here we have support, resistance, which is also the support for this zone. Here's another one, right? So one of the things I like to do, once I identified my areas, I'm just gonna go ahead and identify possible zones of supply and demand, right? Good zones. So here's a nice little zone, right? Here's a nice little zone. And why I'm paying attention to, I know that was the next question. So I drew my resistance. I'm looking, so if my resistance is based off the high of the candle, then I'm gonna go ahead and move on to looking for the next high after that. So if this was my current high of the market, then I'm gonna identify my previous high. Mute everybody real quick. So I'm identifying my previous high. So here's the high. And what I'll do is I'll highlight every high, just so you guys understand what I'm saying. Here's my high, here's my last previous high. So I'll identify that resistance as well. Now I have my supply zone here. So here's my supply zone. Since I think the color gray looks nicer in my chart, I'll go ahead and use my gray colors to identify my possible zone right here. So here's a good old supply area, right? Here's a good old demand area for that zone. Here's my support. My next previous low before that is right here. Cool. Got my zone right here, right? Where was my next zone? Here was my low. Here's my other low. Here's my next zone. You guys see how I get those levels? Raise your hand if you guys know, or write in the chat. Put in the chat, what is it? Give me, like, anybody pick a random number, I don't care. Perfect. Foggy Siri. Perfect. So now I have my zones, right, Arthur? So I identify my zones. I'm also going to identify, since this is my long-term chart, I'm going to pay attention to what the long-term possible movement for this trade is, right? So I'm just going to go ahead and identify the trend that the market is currently at. So I don't have to extend it all the way. I'm just going to go ahead on Trading View. If you go on this option here, you can add an infinite. There's no end to that trend line. So you can see here that this is the trend that the market is currently trending on. So how many touches confirm a trend, guys? 3, right?
3. Mm-hmm.
3 touches. So the goal is on the 4th touch of the trend, we're going to pay attention to what the market does, right? So I'm going to write that down as well. 3 touches confirm the trend. On the 4th touch, I'm that annoying guy that reads out loud. On the 4th touch, you will. So what I wrote here was 3 touches confirm the trend, right? 3 touches confirm the trend. On the 4th touch, you will see the market either respect that trend line, right, and make a strong push to the opposite side, or it will break that trend line with a strong push, okay? So here's the first touch. Here's the second touch, right? Here's the third touch. And I'll explain touches as well. Here's the 4th touch. Right? On this touch over here, the market broke down and came here. On the 4th touch, notice what happens here. The market, did it even touch it? Let me see. Okay, I got it wrong, sorry. This is actually the 4th touch right here. So I'm gonna put a little, so 1, 2, 3. And on this 4th touch, it explains why this candle was so strong here. On top of that, let's talk about what Dean and Arthur were asking about head and shoulders within the charts, right? So here's our zones, and this is on the monthly time frame, right? Here's our zones. If you guys go on the patterns option over here and you open up the sub menu, you can see the head and shoulders options, right? Your goal is to identify your head and shoulders patterns, right? And if you notice right here, and if I can blend this in a bit more, so here's the head and shoulders. If you notice within here, the head and shoulders is always in the same what? Arthur, you remember what I shared with you? The shoulders will always be.
You said the shoulders always in the channel.
The shoulders will always be in the same channel, right? And the head is simply what?
Sticking out the channel, poking out.
Fake out. It's a fake out.
Fake out, right.
Correct. So here's a good head and shoulders pattern, right? On top of that, the head and shoulders signals a bearish move, right? So the market dropped after that head and shoulders. That's after it broke this, what they call as the neckline, right? Which is just the support of the channel you're looking for, those shoulders. Make sense? Mm-hmm. So here's the channel here for the shoulders. I'm just gonna mute whoever. Where's Josh? Sorry. Here's the shoulder. Here's the shoulders, right? You see one shoulder, see the other shoulder, and how the head is simply a fake out, and then the right shoulder is the retest of the head and shoulders. You guys see that? So when the market finally breaks the trend, the support of that shoulder, right, or that channel, notice where the market comes back to retest if you identify the price correctly. When the market breaks, it hit the bottom of our demand zone and came right back up and retested that same support line from the head and shoulders channel. And when the market came back and hit that point, it came back to revisit our zone, shot up, came back in. What do we have now, Arthur? If this price stays within here and fails to
retest,
if it fails to break out of this trend line that we identified up here earlier, we can expect GBP CAD to what?
Continue to go down.
Continue to go down. Why is that?
Because, like you say, it didn't break. It didn't.
Keep it simple. Keep it simple.
Okay.
Here's our channel. let me use your favorite tool, the parallel channel, right?
Mm-hmm.
Here's our channel.
Okay, gotcha.
What is it starting to form now? The head is always a what? A fake out. And the shoulder is always a what?
The shoulder, the
The
shoulder
right, the
is in the
last
channel.
shoulder, the last shoulder is always the retest of the breakout.
Oh, it is? Okay.
So if the head of the head and shoulders is always the fake out, right?
Mm-hmm.
Then the right shoulder will always be the retest of that fake out, meaning that the market will do what? Drop.
Mm-hmm.
Here's one shoulder. Here's the head. As long as the market does not break past the current trend line or the channel resistance that we're currently paying attention to, and our key trend line here that I'm going to put in red, right? As long as it doesn't break that, then we can expect long term for this market to move down. Make sense?
Yeah, now do me a favor while you're doing that, please. Can you mark that one right there with the lines for the head and shoulder again for that one? That's what I got to work on. Yeah, can you just mark the head and shoulder in that channel? The shoulders in that channel.
Of course.
No, not the one in the because we're looking at the one on the right. Oh, you're doing both of them. Okay.
Yeah, I got you. I'll show you both.
Cool.
So, I mean, it's not as perfect. Give me one
No,
second.
but I got to get used to that. That's what I have to work on. Identifying and marking those. That helps out tremendously.
Yeah. So here we have a potential head and shoulders pattern, right?
Mm-hmm.
Here we have a potential head and shoulders pattern here. Now, Arthur, remember what I said. Janelle, what's the number 2 rule when trading? Never react. Always what? You remember. Jomar, you remember the answer? Always what? Confirm, right? Always confirm. So when I say always confirm, what I mean by that is simply to just go ahead. If you see a head and shoulders, right? The head and shoulders is showing you that the market is going to drop. I want you to confirm that the market is going to drop. Hemi, what is confluence? You hear Hemi? Hemi left.
Isn't it 3 confirmations or more?
There we go. There we go. So we're looking for anything that points to more than one confirmation showing us to the market going down, right? So Arthur, we're looking at the monthly time frame, and I'm going into detail here, but I'm giving you all possibilities of the market showing us potential going down long term, right?
Mm-hmm.
So our goal here is to, I'm going to mute you guys real quick. Our goal here is to pay attention to the long term going down. So cool. I'm going to go ahead. I know what the monthly is doing. Let's look at the weekly, see if I spot anything that shows me the same, right? And here, I'm also paying attention to the fact that my zones are on the money, right? I'm paying attention. Here's supply, here's supply, here's supply, here's demand. Here's demand for this zone, here's demand for this zone. Cool. I'm going to delete this real quick. So I understand what the long-term trend is. I understand what the potential direction going down can be for the future, right? Now I'm just going to go on the daily real quick, see if I see anything different. Nope, everything still looks the same to me because it's just at a higher. One second. I thought the right shoulder had to be lower than. No, that's not true, Dean. I don't know who got that. It's not always going to be lower because it depends on the slope. If the head and shoulders is sloped at a uptrend or an ascending channel, you know, the left shoulder is never going to be higher than the right shoulder, especially if you have like a head and shoulders like this, you know. And the problem with us, hold on one second. The problem with most people is that they train themselves to just look at the market horizontally. They don't train themselves to look at the market diagonally, right? So when you're looking at the market horizontally, you're either seeing an inverted head and shoulders like this or a regular head and shoulders like this. You're not looking at the fact that there's also an ascending channel and a descending channel, and what the possibilities are of an inverted head and shoulders occurring like this, or an inverted head and shoulders occurring like this, or a regular head and shoulders occurring like this, or on an uptrend, right? So what I want you to understand is that the market moves left to right, you know? So we can't just get caught up looking at the market horizontally. We look at the market based off of uptrends, right? We look at it based off of uptrends. I taught you guys in the course the market structure, right? On the last highest low point of an uptrend, right? You're going to pay attention to when the market retests that last highest low point, and that would always be the best sell entry for you moving forward. Why? Because that's when the market transitions from an uptrend to a downtrend. Okay? Did anybody not understand that? And I'll show you guys the slides real quick as well. When the market goes from an uptrend, to a downtrend, you're paying attention to the highest low points. When the market breaks past that highest low point after the third touch, which is the last highest low point, right? And we're paying attention, when we say the highest low point, we're paying attention to the touches to the trend, okay? So if the market's on an uptrend, I'm paying attention to the higher low points that are touching the trend, not the higher low points that are either to the left or to the right of that touch. I'll show you what I mean by that. Here's a higher low, here's a higher low, right? But they're not touching the trend in this sense. This one is, bad example. Here's a touch, here's another touch, but this is nowhere near the trend. That's a different trend. You understand? If you pay attention to the trend that this market is showing you, you can actually identify another trend here. And if the market ever reaches that point here to retest that last highest low point, or the case could be, as always, that we're looking at the wrong time frame for that. Understand? So whenever you don't see what you're looking for in that time frame, it could be that you're trying to analyze the wrong time frame. That is why I look at all the time frames. I look at the weekly, I look at the daily, I look at the 4 hour, I look at the 15 minutes, and the way I look at them is based off of what I'm looking for. So as I know I've thrown a lot to you guys, but real quick, just kind of make sure, is anybody lost or is everybody with me? Please unmute yourself if you're lost. If you're with me, just put a number 1 in the chat.
I'm as good as I could possibly understand at this point for a beginner, dog.
Perfect. I'm glad. 1-1, perfect. Everybody, give Jose Gonzalez a round of applause. He understands this stuff.
I'm gonna, you know.
Yo, you know what I'm hydrating myself with? A nice little Corona from my man Joe Mars. Beautiful week.
Como?
But yeah, so okay, so I'm gonna break down to you guys real quick, since everybody's kind of on the same page now. I'm gonna break down to you guys. I've showed you guys how we look at the monthly. I browse through the monthly, the weekly, and the daily. That's my first step. Okay? My first step, this is my checklist. Here, if you got the if you downloaded the cheat sheet, you'll notice that in the checklist, in the cheat sheet, there's a checklist. In this checklist, I have 3 steps, observing 3 time frames for each step. Okay, let's see. Yeah, you can hear me, Jose?
Just a little bit of noise here on this side with my roommate. You can put it up a little bit so I can hear a little better. I got it here on the laptop as high as I possibly can, but if you can put it up on your half, maybe it'll help.
Just for you, I got you, my brother. So again, this checklist here, basically what it does is it kind of breaks down things you want to review to help you understand or gain that confluence for each step. All we're looking for is 3 confirmations on each step, which is just going to give you more confidence moving forward. Now, on the first step, I'm looking at the monthly, the weekly, and the daily. My goal is to understand the market's overall trend, right? I'm going to ask myself what the key monthly, weekly, and daily support and resistance are. Instead of putting all of those freaking zones or channels or lines on my chart, all I'm going to do is simply identify my supply and demand zones for that time frame. Make sense? Then,
yeah, question right quick, if you don't mind.
Go ahead.
How do you know which pair? Because in other words, how you know which pair you're going to use for that day? Is it because you're going based on the strength of the pairs? Is that what you're using to pick your pair for that day?
Yeah, or by now you should have your own currency pair you like.
Oh, okay. So you pretty much using your own currency pairs that you like and you work off that. Okay.
Yeah, correct. Remember, my favorite, my 2 most traded pairs is USD JPY #1 and GBP AUD. Those are my 2 most traded pairs. I analyze more pairs, and the trades that I give out, I'm analyzing them through the one-on-one sessions that I do with certain clients or private mentored students that are doing the personal mentorship program like yourself, Arthur. So like GBP CAD, I've been able to get to know GBP CAD working with you.
Okay.
And so whenever I see an opportunity to trade that, I'll call it out in the alerts chat. You know, NZD USD. One of my students likes NZD USD. We call that out. You know, another one we call out is gold. Bradley Walbert loves to trade gold and oil. You know, he kind of got me looking into gold and oil. Another one, what's another currency? USD CAD. I've always liked UCAD. UCAD is like that currency pair that I don't trade consistently, but when I do, I win good on it. You know, because I understand how it's attached to the commodity of oil. You know, and stuff like that. But again, 90% of the time, you open up my computer, Arthur, the chart you're gonna see is my wife, USD JPY. All right.
Psycho.
Okay.
So again, that's why I'm paying attention to the currency trend. The strength of the currency. I'm paying attention to the news events. And really good question there, Arthur. It's good to throw that out.
Okay.
Because again, if you like GBP CAD, and I see you're liking GBP AUD as well, you understand? So all you have to do is focus on the pound, right?
Yes.
And once you gain a level of expertise to a point like how Jomar noticed today, he's like, yo, when you're trading GBP AUD, you could trade GBP NZD, you could trade GBP CAD, you can trade GBP USD, as long as all those currencies are weaker than the pound. And if you don't notice by now, most of those trades are making the same moves those other currencies are making. Why? Because GBP is the front pair.
Right.
Make sense?
Yes.
So back to what I was saying is I use this checklist to kind of give me the confirmation. So I'm looking at the monthly, the weekly, and the daily to tell me the long term. I'm going through this here, looking for confirmations, right? Respecting support and resistance is level 1 strength. Supply and demand is the higher level of strength, right? So instead of focusing on drawing 1,000,001 support and resistances, I can identify both support and resistance with one zone. So here's resistance, here's support. There's one good important zone there, right? Let me delete these trend lines so we don't get dizzy. So now that I'm on the monthly, the weekly, and the daily, I understand that long term, the market is potentially going down. The second step that I'm going to do is look for any signs of reversals, any signs showing me that the market is not going to move that direction now. Why? Because we're looking at the 4-hour, the 1 hour, and the 30-minute. Now, you ask me a lot, Arthur, why do you like the 4-hour chart? You know, because I trade day to day. I'm a day trader. So I understand that every 4 candles is half of a day. You understand? Mm-hmm. So within those 4 candles, with 2 candles, every 2 candles on the 4-hour chart is 1 session, right? So you have the New York session, then you have the Sydney session, then you have the Asian session, then you have the London session. So since I trade the New York session, right, I used to trade the London session till my body started catching up to me and it started telling me, yo, you got to sleep, bro, you know? Then I learned how to trade the New York session. It's the same thing. I want you guys to understand one thing and one thing only. It don't matter if you trade London. It don't matter if you trade Sydney. It don't matter if you trade Asian or the New York session. You can make money in all of the sessions. You understand? That's very important you guys understand. Most people be like, oh, I got to stay up for the London because that's when the most pips happen. Listen, look. Ask Jomar and Jose how many times we tried trading the Asian sessions and we were caught on a flat market because we're looking at the wrong currency pairs. You understand? And that's what I want you guys to understand. Use FinViz, use Forex Factory, use your knowledge with the charts to give you confluence in the market. Sometimes placing a trade now is the best entry you're going to find, and your move is probably not going to happen till like 12 p.m. tomorrow. I mean, how many trades did we take early last week and the week before where we were early in that trade? We were in that trade earlier in the week, and by the end of the week, that trade was going crazy in the direction we wanted it to go. You understand? It's not a matter of that I was wrong. It's a matter of that I entered that trade too early. I predicted that move way too early. So that's where the topic of conversation that I have with most people is, don't assume. I don't want to hear no one saying, oh, I hope I hope GBP CAD moves down. No, don't assume. Assess in the market. Confirm that it's going to drop. You understand? Get in that good habit of confirming, because you guys got to understand. Most of you guys don't. I don't know if you. I believe in personal development. I believe in manifestation. I believe in putting your mind and your words. The way the flow of life works is like your thoughts become your words become your actions become your lifestyle, and your lifestyles will represent you, right? So for me, you got to be careful what you're saying. When you say, oh, I hope, guess what? Now you're hoping you're going to become a Forex trader. No, the way you become a Forex trader is by assessing. You got to assess the market. How do you assess the market? Putting together everything that I've given you guys to move forward. And I'm not sure if any of you guys have learned the hard way by now, but trading is just as simple as anything in life. But guess what? The mindset is just as important. I think Jomar's been stressing it out in the chat. I know Jose's been stressing it out. I know Neo's been learning the hard way. Bruce, his name's Bruce. He's been learning the hard way about patience. I think everybody's learned about patience, how patience ties into this. Understanding that the market does not go when you want it to. It goes when it wants to. The market has nothing against nobody. So that's why when I give you this checklist, right? And I give you the tool sets that I've given you guys to learn and assess the markets, you understand that the chart that you're looking at is simply just giving you data. And this is why using this 3-step system, using the confirmations, using your tools like FinViz and Forex Factory, understanding potential news events and all that, how all of that combines within each other, guys, I promise you, if you don't realize by now, I mean, I'll show you some of my charts. USD CAD. We've been trading USD CAD. We're selling USD CAD. You know, look how simple my chart looks. Very simple. Let's look at USD JPY. Very simple. Barely have anything on it but zones. You understand? It's just understanding what the potential movement is. Earlier, yesterday I called USD JPY buys at 110.523. After that, literally moments after I called this, she dropped. I was a few hours early. And then guess what happened? Look, she shot up from 110 to 110.900. 90 pips over the course of today. I was a few hours early on that trade. You understand? So again, this goes back to the analysis checklist that we're looking at. If I understand what the overall market trend is, I'm going to look for any signs of reversals. And so if the overall trend is the market going down long term, then in my second step, I'm looking for any possibilities of the market actually going up first. Make sense? And then step 3 is I'm using the 15-minute, the 5-minute, and the 1-minute, looking for my cleanest entries to enter that trade, depending on what I decided. If I'm going to go with the current market trend of that overall long-term market trend, or if I'm going to trade the reversal.
Oh, okay.
Make sense? If you guys understand, put a 1 in the chat.
I understand. I just have to learn it. I mean,
we'll go over it. We'll go over it. Don't worry.
Okay.
So we're on the 4-hour chart here. Let's go on the 4-hour chart and look for any signs of reversals showing us that the market is actually not going to go down yet, right? So what's that going to tell us, Arthur? Right now, we see the current market trend, right?
Mm-hmm.
First thing I'm going to pay attention to is the current market trend. Why? I'm going to pay attention to the last, what? Market was dropping. Here's the last highest low point. Here's another one right here. Here's another downtrend. Right? Here's the last highest low point right here. I'm identifying my support and my resistance based off of that, right? If it's an uptrend, we're paying attention to the support of that last highest low point. If it's a downtrend, I'm paying attention to the last lowest high point of that, and we're looking for the resistance. And I think I said that wrong. On an uptrend, you're looking for the last highest low point. So since it's the last highest low point, you're paying attention to the support. If it's a downtrend, you're paying attention to the last lowest high point, right? And you're finding the resistance of that. So if I found my resistance of this here, I'm going to go ahead and do what, Arthur? I'm going to identify my zone here. So here's my zone for this time frame here, right?
Okay.
Here's my lower zone. Hold on 1 second. How do I mute this? Give me 1 second. Sorry. So here's our zone for here. What was our last previous low point? I got one right here. Right? So here's another zone here. So if I want to identify this as the time frame, simple. You know, organize yourself. Use a color code. Red for now, you know, gray for later on.
Okay.
So here's one. Then I'm going to find my higher demand zone. Here's the resistance up here. What was the last highest point from there? The same last highest, the lowest high point from that trend. Now I got another zone right here. Okay. And I can bring this down to where these match. So now what happens here, Arthur?
Well, looking at it, it's hitting. That's the supply zone right there, isn't it?
It rejected it, right? Count how many times the market has touched that rejection zone. 1, 2, 3, 4. On the fourth touch, what was the market's reaction?
It went down.
And how did it go down? Strong push down, you see?
Mm-hmm.
Last few 4-hour candles, they've been going down, 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 down. You see? So now we hit some type of support here, right? Simple. Here's my support. That's my low point. I'm going to identify the next low point here. Instead of drawing out the zone all the way, all I'm going to do is, most recently to now, put that there. Just going to go put a nice little blue color on it for now. Okay? If the market does not break this mini zone here, right, we can expect it to retrace back up and retest the breakout over here, right? Simple.
No, you're on the 15-minute, so if it don't break it,
no, this is not the 15.
You wouldn't
enter 4 hour. This is the 4 hour.
Oh, okay. Oh, I'm looking. It's got 15 M. Okay, I'm okay. That's 4 hours.
There. I don't know why the 15 stays there. Probably because that's where I'm always looking for entries. So I don't know. But
oh, interesting. Gotcha. Okay, I'm with you.
So here, what are we noticing, Arthur? We have a breakout, right?
Mm-hmm.
And all the market did when it retraced down was what? It looks like it's retesting it, no?
Looks like it. I can't see the bottom line. I'm trying to look at this.
Always remember, you see this inverted head and shoulders here?
Mm-hmm.
Right? So when the market broke out here, all it did was come back and retest. So if the market respects this zone that we're looking at here, then we can expect retracement back up to here. So real quick, my goal is to measure how many pips from where it's at to the next resistance area it can potentially retrace to. There's one. There's another one up here, right?
Mm-hmm.
Here's one zone. From here to here, that's 60 pips. Okay. From
Do
here.
you look at that? Do you look at that? Is that a tweezer bottom here or something there?
This right here, not yet.
Not yet. Okay.
Because we need another candle to close. But what I am paying attention to is the fact that, again, this is where my 3-step system comes in play, Arthur. If I'm looking at the 4 hour, the 1 hour, and the 30-minute, looking for any signs of reversal. So long term, we determined what, Arthur, that the market is going to go down, right?
Mm-hmm.
So right now, what we're potentially seeing is an opportunity for the market to actually potentially go up, right? It looks like it for now, right? And we're on the 4 hour, and the 4 hour charts where we analyze what? Signs of reversals.
Right.
So when I'm looking for signs of reversals, and since I'm on the 4 hour chart and it's giving me one potential thought of, oh shit, this can actually go up, you know what? I don't assume, I'm not going to say, okay, yeah, I hope it doesn't go up. I'm going to confirm that it's not going to continue going up if I'm selling.
Mm-hmm.
And if I am selling and my mindset is set, okay, yo, you know what? If it does go up, where can it potentially go up to? This is where I use all my tools to determine that. If I need to whip out a Fibonacci, You know, I'll place my Fibonacci from zone to zone, right? Right now, for those of you guys that don't or haven't learned what Fibonacci is yet, Fibonacci is just your levels of support or resistance where the market can retrace amongst the trend, okay? So if my zone is from here to here, right? The way I like to draw my Fibonacci areas is based off of one push. And what I mean by one push, I'm looking for one push up or one push down. So here, I'm going to draw my Fibonacci lines going in the trend that I want it to go. So since this was the uptrend, I drew this fib based off of the uptrend, but the numbers are actually going with the downtrend because it needs to make a full retracement of where it started. Give me 1 second. So when the market makes that move, right? Each level is just simply representing a percentage of that retracement. Okay? Give me 1 second. My son just woke up. Sorry about that, guys. So each line is just representing the percentage of that retracement move. So if the market shot up and we're looking for a full retracement, right? The way I draw my Fibonacci's is based off of the beginning of that upward push. So from here to the ending of that upward push, I just simply have my numbers going opposite because as the market is starting to retrace back down, if it made a 50% retracement, then we'll see the market hit that 50% line and then continue going up. If it makes 100% retracement, then we'll see the market come all the way down and go up. If it goes below that, there's levels below that as well. You have 100.618%, you know, 161.8%, or even lower. And you can add custom zones or areas, but all I'm focusing on and all I care about is what happens when the market reaches these zones and what's the reaction towards that zone. Because I'm not holding my trades. I'm not looking to, or my goal is not to hold the trade past, God forbid, a few days. You know, my goal is to enter a trade, get what I'm looking for, and get out. I'm not looking to give money away to nobody. I'm not looking to try to catch 1,000,000 pips on one trade. I rather consistently catch that over the course of a few days than make 400 pips on one trade. I rather make 400 pips on 10 trades than one trade holding that trade for 7 weeks for 400 pips. That is just how I am as a person. So when you guys are looking at this, as you can see, each zone is highly respected and they're highly important. So if you haven't watched the Fibonacci videos yet, your important Fibonacci zones or levels are the 23.6%, the 38.2%, the 50, the 61.8, and the 78.6. I also like the 88.6%, simply because if I enter my trade at the 38.2, my first take profit is 61.8. My second take profit is the 78.6. My third take profit for that trade will be the 88.6. Okay? And how each market, how the market responds when it fails to break any of these levels, very simple. I'm not going to get too much into it so I can finish showing you guys how I go about the charts. But I did just post a video earlier that I went through with Glory and Hemi. We were talking about the Fibonacci if you guys want to watch that. It's also live on the public YouTube channel if you guys want to go on there. But for now, you know, I pay attention to the fact that the market hit the 78.6% line. On top of that, it respected this blue zone we drew out here, which is representing a demand zone, right? And when the market fails to break a demand zone, Arthur, what are we looking for?
If it failed, looking for if it failed to hit the demand zone. If it fails.
Yeah, when it fails to break the demand zone, we can expect the price to go up, right?
Right.
Because when demand is high, price goes up. And when the supply is high, price goes down, right? Remember that analogy we went through?
Supply and demand, yes.
Yes. So simple. As we understand that, the way I understand with my Fibonacci levels is the market failed to break past the 78.6 line. So I'm looking for a slow, it's not going to be as brutal of a retracement as it were if it were the 38.2% line. Because if the market fails to break the 38.2% line, we're always going to expect a strong push to the opposite side, right? But as the levels get lower, it will retrace, but it's at a slower pace. That's all I want you guys to remember. If you want more details on that, go on to the next video and watch that. Very good to know and very, very informative so that when you're using this, helps you out. But again, I'm placing that. I'm now seeing that I have a potential of the market going up, right? I gave you two areas that we can see the price come up to and retrace. It could either hit and miss this point right here from here to here, which is 60 pips, or it can from the zone where it's at all the way up here, which is 130 pips. So now from there, Arthur, you make the decision. If I'm willing to take this trade long term, right? Am I better off waiting for the market to go up and retrace to its highest point here and then look to sell? Or am I interested in buying the reversal and then closing and selling the turnaround?
It's best to wait till to go up to the highest, I would think.
Again, that's in your decision, you know?
Mm-hmm.
You have someone like Jose, you know, who's scared to place a dollar lot, and you know,
can't with you. Can't with you.
He's, you know, this guy likes to scalp for like a half a pip, you know. So, this guy's trying to make, you know, he's trying to he. I tell you, man, some days he wakes up and he says to himself, "Man, let me get some money to the markets. I'm feeling good today," you know.
That's what you answered my question, because that's what I was thinking. I was wondering, do you actually take trades on a retest? That's what I was going to ask you earlier.
If it's showing me signs, and at the moment in that present session that the GBP is stronger than the CAD, and I know that there's potential of it going up, then I'll take the risk I won't put such a high lot size because it's not an important zone, you know. Now, if the market was down here and it's showing me those signs, this is an important zone that it's failing to break, not this little blue box, you know?
Mm-hmm, mm-hmm.
So I was talking with Hemi earlier, and Hemi, he was asking me, man, you know, his issue has been, you know, he's been consistent. You know, he's consistently growing his account more than 15% a day, I think he said. And, you know, but what he does not know is when to enter a high lot size. And Jomar.
Yeah.
Why don't you share with the guys where you've learned to identify high lot situations? Like, what do you look for when you decide to let me enter this high lot. Like, what are you looking for? What was it you told me that you look for?
You got to make sure that you're either at support or resistance.
Correct. And why is that, Arthur? Real quick. I'm sorry. Why is that, Arthur? Why are we looking for support or resistance?
I know the support. If we have support, what we do is we buy on support.
Correct.
Resistance, we sell.
So if we're talking about zones, Arthur,
okay,
what are you looking for? Supply is our resistance, right?
Yes.
Supply represents resistance, and demand represents what?
Buy. It's support. Support.
Correct.
Mm-hmm.
Correct. So now that you know that, Jomar, keep going. My fault.
No, it was basically saying that is your most highest probability chance of the trade going your way, and instead of being caught in all the up and down if you try to place a trade within the actual trend.
Mm-hmm. And what's another thing the key word? What's that key word you told me? Exhaustion, right?
Oh yeah, I always wait till it exhausts before I place a high lot as well.
Correct.
Do you also wait for the candles to close completely before you enter a trade?
Correct.
Yes.
We always look for that. What's the one sign that I told you, Arthur, to look for when it shows signs of exhaustion? What's that one candle we're looking for? You remember. I'm gonna lead you to it. Pin.
The pin bar. I was about to say that. I was about to say the pin bar.
The pin bar. And what are pin bars? At support is a.
Oh, okay. At pin bars at support.
At pin bar at support is a hammer, right?
Oh, okay. Because you're saying the hammer. Okay. Yes.
And then a pin bar at resistance is a shooting star.
Shooting star. Yes.
Right. So
yes.
When he sees signs of exhaustion, right? What's a sign of exhaustion here? Here's a sign of exhaustion, right? You see this pin bar right here? Longer wick than the body, little to no lower wick, right? Once he saw that, on top of that, he saw that there was indecision within the candles, and on top of that, it failed to break past our zone here. So if he saw that, and he saw that the market failed to create a higher high, then he knew this is a potential where the market is going to try to retrace. So this is an area where to enter on a higher lot size than he averagely would.
Okay.
Right? What lot size have you been using, Jomar? 20 cents or 10 cents?
Yeah. Well, lately I've been using 20, 25 cents, yeah.
Yeah. And what's the advice you wanted to give everybody earlier when, like, you know, how you've been going about it and how you've been successfully growing your account?
Oh, well, technically, basically, I've been mentioning it on the chats where, you know, obviously don't over leverage your account, and always be conscious of, you know, of your lot sizes, because in the event that you have a trade that may potentially can go bad on you, you could probably ride the wave. And one of the things I've been using recently is that if I do have a trade that goes bad on me, and not the right way from the beginning, I'm able to scale it how he was saying earlier. And what I do is at an exhaustion point, or when it hits that support or resistance to the next level and it reverses, that's when I come and enter with a high lot size. And on the reversal, you can come down collecting those profits. And the higher lot size that you place just there on the recent entry is going to be able to overcome the smaller entries you have placed at the beginning, and you can close those out even with a possible small loss. But the higher lot size on the reversal is going to supersede those entries.
Now, do you use stop losses?
No.
We don't believe in stop losses, man. That's
No.
No, I've been since I've been here in trade, and I have not been using it, and it's not bad, like you said, if you don't over leverage.
Not at all.
Yeah, if you don't over leverage, it shouldn't be an issue. Now, if you're gonna go in with a high lot size, and you want to be able to sleep well or go away from your phone, then you may want to put a stop loss. But
correct,
you know, if you're not over leveraged, then there's nothing to worry about.
Mm-hmm.
Mm-hmm. I mean, like Arthur, we've been there was when we had FOMC, we were holding a trade like I think it was gold. Gold was almost like 200 or 400 pips negative, like and we were able to close that in profit a few days, like a few days later. And I know people who caught gold at the very tip top and they wrote it down all the way to 12, whatever it hit earlier, 1292 or something like that. And it's just like, again, if you don't over leverage, a loss is not a loss till you close that loss. I hope you understand that.
Right.
And a win is not a win till you close that win either. So you can be in profit or you can be in loss. And in my eyes, it's not a loss till I close it. Now, my goal for you guys is to consistently enter trades and not have to deal with drawdown. I don't look to hold the trade and drawdown. If anything, if I understand that and it's still in my favor or it's still in my interest, then I would make, what is it you call it, Jomar? The business decision.
Yeah.
The business decision. And you have to treat this like a business. It's true. And when you have to say to yourself, okay, am I better off cutting my losses and moving forward, or am I willing to take the risk of increasing my losses?
See, my account, the one with the GR, it was working out, but the only thing is, I think as a matter of fact, I'm sure that was my baby account, which I lost it, but I think I over leveraged it, so I couldn't stay in there long enough for it to go where I was looking for it to go.
Yeah, and remember,
I lost my money. That's what it was.
I don't know if you saw it. I put a video showing you how to take partial profit or close out partial loss of your trade. Like if you need to take half of your position so that you can hold that trade longer, go right ahead. One of the things I do, if I only place one trade and I'm looking at 3 different take profits, if I got a $3 lot size, I'm taking $1 at a time in each take profit. I showed you guys how I identify those take profits, based off of the higher lows or the lower highs of the previous trend. If that's the case, if I'm using the Fibonacci and I entered at the 38.2, I showed you where I potentially identify my take profits at, and all of it is just identifying where it's at. And I know I've been stuck on this topic for a little bit, but I wanted to stress that out to you guys because moving forward, sometimes the decision that you guys rush to is when you enter the trade. I have that issue at times where I rush a trade because I want to get into this trade so bad, But at the end of the day, how many of you guys, and I want you to place the number 1, how many of you guys have entered a trade, right? Rushed the trade, and it wasn't until you either took the loss, got blown out, or got frustrated and closed the trade that the market went ahead and made the move that you wanted it
to. I can testify to that one.
Oh, Jaylene, you got caught in that one.
It happens as soon as you close it.
Yeah, or when Jose Gonzalez enters the trade. Guys, be careful. But like I said, man, at the end of the day, the important part is that you guys are understanding both aspects of the game. Because I swear, and I testify for my hand on the Bible, a lot of my most successful trades, I kept it stupid simple. I found 3 confirmations. I identified my zones. I identified my areas of interest. I identified my worst case scenario. I identified my best case scenario, and I moved on. You understand? Very, very simple. But in the end, guys, I want you guys building confidence, because confidence is what helps you stay consistent. Because when you're confident in something and you know what you got to do and you do it consistently over and over and over time, guess what? You can expect the same result. But when you don't do that and you expect the same result is when you lose. That's when you're crazy, right? That's the definition of insanity, right? Doing the same thing over and over, but expecting a different result. It's just like how not doing the same thing over and over and over, but expecting a different result. You know, like consistency and consistency comes in with sanity. Like sanity, we all do the same routine, right? I can't go about my day if I don't fix my bed the minute I get off of my bed. Like if I come home and my bed was not made after I left my house, my day always ends up the worst day possible. If I don't fix my bed in the morning, my day is the worst day. Everything crazy happens to me that day.
No, I don't like that either anyway.
You know? You look at Jose. Jose don't shower in the morning. It's against his religion, you know? That guy. I want you to understand that, you know, you guys got to be careful with this guy. Him and his hair and his car, you know? Stop poking me. But, you know, in the end, guys, I want you guys to understand that. Like, so getting back into focus of what we're speaking about here is, right? We know long term that the market's going to drop. We've seen possibility of the market actually retracing, right? Another reason why we can see the market retrace is the fact that it's currently trending amongst this trend here, right? So if the market doesn't break here, what we can see is retest of one of these zones here and then a push down, which will be ultimately telling us if the market is going to go down. If the market is going to go down, because we're approaching the fourth touch of that trend, and if it does go down, right, we know that if we sell anywhere here, that our long-term hopeful target is the top of this zone for the short term. You understand?
Mm-hmm.
Make sense, everybody? Give me one if you guys understand. Especially after that exposing Jose's truths. Let me see who's on here with us. Brandon, you just got. What's up, Brandon? Elizabeth, how you doing, ma? I hope everything's good. Let's see. Javani, how you feeling, man? You're gonna mute yourself.
I'm all right. I'm just trying to listen and absorb it. I'm all right. It's a lot.
Don't worry, bro. We're gonna teach you how to Google Translate all this, all right?
Yeah, I'm gonna need. My thing is, I'm gonna need more education on like the verbiage and the words and stuff you're using to really understand it.
Believe me, it sounds French, but it'll soon be English for you.
Got you.
Let's see. Brandon, you with us?
Yeah, bro. I hopped on late, but I'm just looking at the charts and just kind of catch up little by little.
No stress. I've been recording everything, so you ain't missing out. Elizabeth, I know you're new with us. Let's see. Unmute. Not working. Furman, Glory, you guys good?
Yeah, we're good here.
Jaylene, Janelle,
Yeah, I'm here.
you good? I'm not losing you, right?
Nope.
All right, good. Janelle and Jose, you good, right?
Yeah, man, we're straight.
Noel, what's up, Noel? Let me know if you good. Lewis, you good?
I'm good.
Hey, Sam John. Who's Sam John? Let's see. Sal Amelis, you good? Yes, no, maybe so. Joma, how you feeling? You good?
I'm good.
Perfect. So I'm gonna proceed moving forward with everybody. So here we identified the potential of a reversal, right? So now what I'm gonna do is I'm just gonna identify on the smaller time frames, the 15, the 5, and the 1, because this is where I look to enter my buys, right? So what's the first thing I'm noticing right away? you know, with my experience, I've noticed that there's a potential inverted head and shoulders here for me, right? So real quick, since I'm looking for possible areas of entry on this trade, the first thing I'm doing is pulling up my FinViz, telling me what's my currency strength. GBP is currently still stronger than every other currency. Cool. Yes, Jenna, I got you, man. Hope you have a great day at work. So after that, what do you think would be the most ideal second step, Arthur?
I'm lost on this one.
I'm looking for the market to shift from the downtrend to an uptrend, right?
I will put the channel on there that kind of give me some insight. That's
Correct. So I'm just gonna identify my last highest low point. I mean lower high point, right?
Mm-hmm.
And here's my last lower high point. That was the last touch. If it helps me identify it, I'll place my little square here. Right? Here's my last lower high point. So I need to see the market. Now on top of that, we're starting to see an inverted head and shoulders. The pound is stronger than the CAD right now, right?
Mm-hmm.
Pound is stronger than the CAD by 13.13%. So it is possible that the market is going to go up. So my best entry is going to be what, Arthur? If I did decide to buy this, if I buy now, right, I can deal with the potential of the market potentially hitting the same trend line, failing to break it, and making a strong push to the downside, right?
Yeah. Yes.
Because we've learned that if the market doesn't break that zone, it always makes a strong push to the opposite side, right? Especially if it's the fourth. Yeah, I got you.
Yes.
So if the market, what we'll wait for, this is where waiting comes in clutch, right? Or this is where entering this trade, if you're that committed to it, entering this trade at a lower lot size, right?
Mm-hmm.
Waiting for it to make its move. And once you see that the market went ahead and broke past this here and retested where we wanted it to retest, either on the trend line or on at this price here, right? When the market's somewhere down the line cleanly retests, and you remember what we spoke about with the touches, right?
Wait, you talking about 3 touches?
The 3 different types of touches, right? How if the market, and let me,
I got it.
I'll go over it again because I didn't go over this with some people. But if the market touched the trend line on one side cleanly, right? Let's go with this. We have to see the opposite side do the same. Right? So if the market touched it one side cleanly, we have to see the market do the exact same on the opposite side, right? If the market gapped over price, we want to see the market gap over the price as well on the opposite side. What do I mean by that? Since we're speaking about market structure here, if the market retested this resistance area here, which is the last lowest high point of that trend line, cleanly, then we want to see the market retest this price point cleanly on the opposite side, which will signal us the market going up. All right? Let's look at some example, guys, before we move forward with that. So here's our last lowest high point. Here's our resistance. Here's the touch. Here's the touch. Right? Market shot up after that. Make sense? When the market failed to break out over here, what was the reaction? It dropped from here to here, 40 pips.
That's the 4 touches where you start at the top there. That's the number 1 up there.
Yeah, this is 1.
Right. Right there. Okay.
This is 2.
Mm-hmm.
This is 3.
Mm-hmm.
On the 4th touch, it faked out, came back, bottomed out right here, broke out, retested, and kept going.
Mm-hmm. Okay.
If you guys remember the candlestick patterns or the formations, here's a falling wedge after a bearish move. It's a reversal pattern, right? So just like how we count the touches at the top up here, we can count the touches at the bottom here. Here's 1, here's 2, here's 3, here's 4, right? The market never came back for another touch. Instead, it faked out here and shot up, right? So now that we're seeing that, notice what's happening now with our candles over here, right? We now have a hammer here. It's starting to look like this inverted head and shoulders is starting to form here, right? And all we're waiting for is the price to break out of this price zone here, or this line. Let's do it in purple. The market breaks past this purple line and retests it cleanly, and we can see a push towards the upside. And one of the 2 areas we paid attention to, right? This price point right here, this price point up here. Make sense? So if what I look for, Arthur, when I'm going to enter a trade is I'm maneuvering between the 4-hour all the way down to the 15-minute chart and identifying potential signs of reversal of that overall long-term trend. And if that's not showing me the case, I'm maneuvering through the strength of the currencies. Brandon, you asked me to talk about the currencies. I spoke about this in the beginning, but from left to right, the first currency to the left will be your strongest currency. And as it goes down towards the right, those are how your currencies weaken. So every session, which is every 8 hours, you're looking at this change of strength between each currency. So if I'm trading GBP USD and I want to buy, I want to see GBP on the left and USD on the right. If I wanted to sell GBP USD, I wanted to see GBP on the right and USD on the left. And whenever you see anything like that, you want to see it in the sense of GBP being the strongest or the weakest and USD being the strongest or the weakest. You don't want to see them kind of next to each other because sometimes that's when you see the market consolidate.
I have a question for you pertaining to this again. We talked about it, and I kind of wrote it down on the notes, and this was pertaining to this, the weaker and the stronger currency. Say, for example, I'm doing GBP and AUD, and you're saying if on the left side there, if the GBP is greater, the strength is greater, that would be opportunity for sell.
If GBP is greater,
yeah, if it's greater,
then we're looking for.
I mean, no, excuse me. I'm sorry. If it's weaker, I got to mark. If it's weaker.
If it's weaker than the AUD,
exactly.
Then we want to see. Yep, we want to see. We want to look. We want to confirm sales.
JL.
Yeah.
To make this simple, just go to GBP JPY, and so they can see what's going on right now.
Yeah, give me 1 second. I just realized my battery's about to die.